What's next? I saw this article by J. Bradford DeLong. It said, "Why all the inflation worries?"
I was hoping you're gonna. It's so good. You take the lead on this one because
This was
this
confusing
is some.
as shit.
Well, god damn it, Dylan! Don't make me do this because you sent me this article. I'm like, oh, this is some like real economics talk. Like, I'm too stupid to really understand this deeply. So I was hoping you would take the lead and break it down for us.
Yeah, as best as I can. So he said, some respected economists are talking as if the U.S. economy is in serious inflationary trouble, but the current uptick in price growth is highly likely to be a largely benign consequence of the post-pandemic recovery. This guy goes on to say, can you screen share while I do this?
Sure.
Just screen share the article or whatever to keep that screen active. I was attracted to this article because I was like, no way is this guy trying to say that what's happening right now with inflation is like a good thing. He goes on to say that he talks about the employment cost index and says that real wages are currently 4% below their warranted value from adding on the underlying fundamental productivity trend to the pre-pandemic real wage employment cost index level. I don't know what that means, but he says like the cost of having employees kind of stayed the same. So the economy kind of floated in the right range. And then he moves on to say, those who believe that the U.S. market is in some sense tight point out that the ECI increased by 3.7% in the year to September, well above its 3% annual growth rate in the pre-pandemic years of former U.S. President Donald Trump's administration. So he's saying that
the cost to employ someone increased by 3.7% this year, which is higher than 3%. That's how I think I kind of understood it. But I might not have a good grasp of the employment cost index.
This is where, me neither.
Metric is referring to.
But this is where I felt like he started doing mental gymnastics a little bit. He said, but because the U.S. consumer prices have increased by 5.4% over the past year, the ECI basis real wage has fallen by 1.7% in that period. Even though it went up by 3.7%, the consumer prices, the inflation offset it. So it's actually dropped. So it's actually a good thing because we dropped that wage you were just talking about.
Real wage, which is wages adjusted for inflation.
Yeah, so it's like it actually costs less to employ people because things cost so much. I think that's what he's trying to say. He says, now casting is extremely difficult and hazardous, but the now that I see today is the one I forecasted 2 to 3 quarters ago. Yes, the recovering U.S. economy, like a driver who suddenly accelerates, is leaving inflationary skid marks on the asphalt. But as I argued in May, these should not concern us because burning rubber to rejoin highway traffic is not the same thing as overheating the engine. And he goes into Biden's plan that he signed, how that is
a good thing.
Yeah, it's a good thing because that's the pushing the gas to the pedal to the metal to catch up with the highway. Like we're throwing money into the economy to get it going again because it kind of stopped. I think that's what he's getting at. Let me find myself. Economists whom I respect talk as if the economy is in serious inflationary trouble. Jason Furman, a former chairman of President Barack Obama's Council of Economic Advisors, thinks the original sin was an oversized American Rescue Plan. So Barack Obama's Council of Economic Advisors thinks that Biden's rescue plan is the reason inflation's happening and we're kind of fucked. And this guy's saying, no, it's the solution. It's a good thing. The $1.9 trillion recovery package that President Joe Biden signed into law in March is the original sin. In Furman's view, it would have been better to have less aggressive policy measures and thus a slower employment and growth recovery this year. Because Biden's plan contributed to higher output but also higher prices. And according to the same New York Times report, former U.S. Treasury Secretary Larry Summers thinks that inflation now risks spiraling out of control. So there's a dynamic happening here, and I think he's about to get into it.
Inflation warriors then argue that the COVID-19 crisis has permanently damaged the supply side of the economy, but causing a lot of early retirements as well as lasting disruption to the lean and mean supply chains on which a good deal of productivity and prosperity had depended, which we talked about that in the supply chain issue a couple episodes back with the shipping crisis we're seeing right now. Well, we were seeing whenever we saw those shipping containers stuck out at the sea. You know what I'm saying? You remember that? Mm-hmm. Anyway, find your place.
Said, whenever you have a lot of money chasing few goods, a lot of money chasing too few goods, you have this shortage of labor and you have this overactive market. So you have all this money, you have no labor, and then it spirals out of control from there. So he said that's a situation that happened after the 2008 financial crisis in 2010. And he has it right here. But similar arguments in the early 2010s in the aftermath of the 2008 global financial crisis aimed to justify policies that did not put the pedal to the metal and attempt rapidly to reemploy so-called zero marginal product workers. So he's saying in the 2010s after the market, they did not want to do what Biden just did. One consequence of this timidity was the election of Trump. Okay? One consequence of not doing what Biden just did. If Biden doesn't do what we just did, we're going to get another Trump because it happened in 2010. We didn't do that, so we got Trump, whose rise was fueled by the rage of those who thought elites cared more about immigrants and minorities than they did about blue-collar workers whose economic opportunities had never recovered to pre-2008 levels. That's crazy. That's crazy. There's so much packed in right there. The people who voted for Trump were people who thought the elites cared more about immigrants and minorities than blue-collar workers. That's.
I mean, it's kind of true to a degree, right? Like he went after that voter base.
Well,
he's essentially saying that those in power, the elites. I mean, that's definitely what Trump was when he was in that first campaign run in 2016. That's definitely what he. Right. That's not the main thing he ran on, but he definitely pointed that, like, hey, look, the Democrats are more worried about giving immigrants and minorities voting rights or whatever the fuck than they care about, getting you your jobs back, right? He definitely ran on that in the Rust Belt and all those types of places.
Yeah.
So
I'm having trouble remembering what that struck in my mind earlier, but I felt like it kind of whitewashed it because what happened in 2008 was like a intentional thing that Wall Street did. And then Barack Obama gave the banks bailout money that should have went to the people who lost all their homes. Like 5.1 million people lost their homes, and all that money went to the banks. The banks got double. So it was actually a very politic Wall Street contrived thing that fucked people. So for this guy to say that the way that was handled led us to Trump because we didn't pump money into the market and then he turned it into like this partisan thing. I don't know this. It's hard for me to wrap my head around, but I was starting to see this guy kind of turn it into a partisan issue because Trump or no Trump, Obama fucked the whole country with Wall Street after 2008.
One thing, maybe you could help me understand.
And that's not why we got Trump,
that sentence, but like it says, perhaps similar arguments in the early 2010s in the aftermath of 2008 global financial crisis, which I know you just read this. I'm just reading again so that I can understand it. In the aftermath of the 2008 global financial crisis, aimed to justify policies that did not put the pedal to the metal and attempt to rapidly reemploy so-called zero marginal product workers. What are zero marginal product workers?
I don't know, man. Part of this is me trying to understand this article. It's very challenging because it's kind of economically advanced for me. But this guy is basically laying out an argument that inflation is a good thing right now because what we're doing now is what we did not do in 2010, and that led us to Trump and all these right wingers who didn't learn to code. That's what I'm trying to get. That's what he's saying.
Yeah, that's
all
definitely
these
what
right
he's saying.
wingers that didn't learn to code voted for Trump because fucking it's like none of that has anything to do with anything. So why he's putting it in here? But some people say that Biden's stimulus package is the reason we're in inflation, and this guy's saying it's the solution. I don't know what to think. I just know that there's a lot to learn about economics before I actually talk like I know what I'm talking about. You know what I'm saying?
Yeah, that's why I was like, I don't know if I want to cover this article. I
wanted to cover it because it's so advanced. That's what we're here to do, man. We're here to do the reading and talk about it. We don't have to be right. Yeah, we read that thing. I tried, and we talked about it. This guy says inflation's good. What do y'all think?
Well, he's saying that inflation is not. So, like this sentence kind of breaks down what he feels. So far, rising inflation has not been incorporated into any of the sticky prices in the economy, according to the measure constructed by the Atlanta Federal Reserve. True, the financial market's current 30-year break-even inflation rate at 2.35% is more than half a percentage point above where it settled in the second half of the 2010s. But today's rate is similar to that in the first half of the decade and slightly below the level that would be consistent with the U.S. Federal Reserve's inflation target of 2% per year. So you're saying that we're still below the 2% per year target of inflation that the U.S. Federal Reserve is anticipating, from what I understand with that.
Yeah. Well,
current uptick in U.S. inflation is likely simply rubber on the road resulting from the post-pandemic recovery. There's no sign that inflation expectations have become de-anchored. The labor market is still weak enough that workers are unable to demand substantial increases in real wages. In other words, workers are not able to, the market's not at the point where workers can go into their jobs and be like, hey, you have to give me a fucking raise or I can't survive right now, right? Financial markets are blasé about the possibility of rising inflation. I guess he's implying that the stock market hasn't completely imploded, which it kind of has, and a substantial fiscal contraction is already in train. When was this article written? Okay, so the problem with this article is this motherfucker wrote this in 2021. So, yeah, he's wrong.
All right.